Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe to the channel, and also make sure you check out my website for the trade zones, weekly trade zones for the S&P E-mini futures, and also my Patreon page at patreon.com/daytradingfearless. But as always, let's jump right into it. So this video is actually going to be about double distributions with market profile. And pretty much first off, a market profile, if you don't know what market profile is, in a nutshell, it's volume at a certain price. Okay, so instead of volume, where normally you see normal volume like this, right? Okay, this is more and that would be by time. This is by price, right? So how many contracts have traded at, we'll say, 39.01 on the S&P futures, right? Or at 38.9650, right? And so what happens is you actually start to create a distribution like this, right? So this is a high volume node. The largest spot, okay, is the high volume node. Right here, you have this white line right here, okay? That white line is called the point of control, okay? That's where the most volume has traded during the time period. So right now we're looking at a 5-minute chart. So this is 1 day and every candle represents 5 minutes, and this is regular trading hours only, right? So what happened was price open, kind of bounced around here, started to fall, okay? But what happened was while we were bouncing around all in here, we started to build out volume. And if we just kind of take a line like this, look at how many times we crossed the same line, right? Think of it as the reversion back to the mean, right? We kind of gap higher, pull back, go down, come back up, go down, and we keep crossing this line, and that's where the most volume has traded based on that, because of all the number of contracts and all that. Then what happens, and think of this as a potential kind of where the market is accepting price, okay? That's what a high volume node is in just sideways action, and that's what builds out this perfect market profile right here. Now, this little area is what's called a low volume node, okay? And as you could see, very little time and price was actually spent, meaning not that many contracts traded right here at this 38.90 level, because we fell right through, okay? And then we kind of fell, and every time we rallied, we really didn't get that much time or contracts being traded at that price. And so this is what creates your second distribution, right? So this is a double distribution right here. So here's one high volume node, very small low volume node, and then a high volume node again. And this is where price actually settled throughout the rest of the day, and then late into the day price fell. Well, if you think about it, this white line was up here when we were just trading right here, right? That was the highest, the high volume node, right? And then price kind of fell, and it was looking for buyers, and then it finally found buyers, right? So the sellers came in, price was moving lower to find buyers, price then bounces back up, and then it finds a resistance level. And usually this low volume node will counter with maybe something like this, where it was maybe a swing low during the time frame, right? Because as we came right back up, look where we went, right back to it, and that's what created the low volume node. And so if you see this, you could go, hey, we'll probably kind of chop around this level for a while and start to build this out. One thing with market profile, and I'll say, is it's almost like you'll see something like this, right? And like this. Okay. Oops, messed that up. Let's go back to it. And what price is essentially doing is building out a pattern. And our job as a trader, when we look at market profile, is what exactly is the pattern they're trying to build, right? And when you could see something like this, like sideways action, go, okay, hey, they're trying to pull the point of control back up, or they're trying to keep it down at this level, because remember, the point of control is the accepted price, because that's where the most volume has traded. So if price was to kind of come here and then start to reverse and move back up, I would probably look for price to come back up and then pull back, right? Touch the point of control and then pull back, because this is the fairest price to do business. Now, you could see multiple different double distributions, right? You could see there's one here, double distribution, small, right? And a low volume node, and then another another distribution, right? And you see price just kind of churned right around here. This point of control was here, but then when we broke out, right, and probably on this pullback with all the time being spent right here, what happened was, instead of saying, hey, we want this to be the low or the point of control, we're going to move it up here because we see this is more of an accepted price. So that's all that really is at the end of the day. It's don't make market profile harder than it really has to be. I think people make it too hard, right? Just look for patterns, and every single day you watch this, you'll start to see these patterns become better and better and better, right? Or you'll become better and better and better, because you'll start to be able to identify, hey, I feel like if this is, we trade down here, and then all of a sudden we have a breakout and price is holding, well, maybe price will stay up here, and the markets to be, as I call them, want the point of control to be shifted all the way up here, so it'll trade sideways until this gets shifted up. Now, in this case, on this day, it never got shifted back up, right? The point of control. So if there was still more time, I would probably say, hey, if we go up too high, I'd be looking for maybe a short. If it came back down to this level, we could see this is where they're trying to build the point of control. Maybe if we overshoot, I'll look to get long, hoping that they bring it back up here, and then maybe sell for quick little scalps. So that is kind of what's going on. How to trade double distributions. Think of them as their own separate thing, but also you could think of them as really good support resistant levels. If you see them already built out, it gives you a clear picture of where the accepted price is that the market likes at that time. So I hope this video was helpful. As always, thank you for watching, and we'll talk to you soon.